puts are usually my pre-workout. I had a good day today, just under 9,000, but I'm honestly really tired and we have a lot to talk about. This has literally been the worst fourth quarter since 2008 and also the worst December itself since 1931, the Great Depression. There's people saying we are headed now to a depression. No recession, depression is what people are saying. The market hit new lows today. The Fed raised rates yesterday. We're ending the year. Is there going to be a Santa Claus rally? Where is Santa? Where's Donald Trump? Where's China Trump or China Claus? What's going to save us? We don't know. We were on stream today for 7 hours. That was really fun. We made our YOLO plays. I did make a play. I cut out, $9,000. I took profits, literally $18,000 this week so far. And I took profits on puts because they were expensive today. And, I want to talk about why the market's down collectively beyond the rates. I think it goes beyond that. There's indicators that we could be watching for right now, and then also at the same time what I'm playing and what could make the market bounce. So let's talk there, because before the doom and gloom, there's even people are saying when you're seeing the markets go down right now, this is coming literally right off of the rate hike. Even the Fed, there was other people who spoke today like Mr. Bolton, and again, you guys could get a picture of, did I say Mr. Bolton? I think Bolton, no, I forgot who it was, but he, let's take a look. Here's the yearly chart on the Fed, and if you watch my video when I said the market's going to correct in 2019, you could see now we're starting to see the S&P start to look like some of the other charts around the globe, but we'd have to break 2017 lows, so that's a long way down, and it's a long way down, but it's still inflated, and the Fed has even been talking pretty hawkishly now, which is pretty, in the sense that they're going to keep raising rates and people are tripping out. But now it also goes beyond rates. There's more reasons behind this that we want to talk about, but a theory floating around, there's people who have said that the Fed wants to crash the market for whatever reason, because even the dot plot, how they're voting, how they're talking is pretty, on those lines, but that could be the case. If I would say that, I'd say the market's pretty low, or it could go a lot lower, but it would still be somewhat higher. And the next thing to look out for is we have earnings. I think pretty much they could be driving it down until earnings comes around, and with all of the negativity in the market, and this is what I'm cautious for, I'm expecting that correction in 2019, and even, coming in this next week after Christmas. We really only have tomorrow as the final trading day, and then that last week, December 28th, after that. But I'm looking for one final bounce in there if we don't see that. But, we have earnings coming up. You can't forget that, coming around in February. And the thing is, the Fed could be doing this. It was already negative. The markets were already bad. People are continuously going to get more negative, and it's already pretty bearish so far. And if we even get one more washout, come earnings time, the markets could have sold off so much, and some of these companies could report, and that could be that bounce before we see that final drop here in March. But a lot of things have gone crazy with rates and everything, and this whole thing is to watch is now, and I'm going to talk about why the rates are important, but watch fixed income, watch bonds, and again, too, we're going to be streaming tomorrow morning, so come on there and you could get a hold of that to be looking, and if you have any questions. But the next thing is, why are the rates important? And this is where I want to lead it into, why the markets are going down. I showed the charts, the 2018, 2019, or going back to 2015 with China and stuff, but essentially, when rates go up, it's making debt, this cost of service debt, more expensive, and that's going to affect both loans, credit markets, fixed income, but now the foreign countries, and then it has an effect going back to currency. So China has debt with US, pretty much if our dollar becomes more expensive or their currency becomes weaker, it's going to make their debt cost more and more money. I think I actually have a video on this that I posted in the past, but essentially, it's kind of this whole chain reaction because people are worried about the Fed, but coming into everything, there's a lot of political risk, political uncertainty. People are talking about Trump getting impeached, which I don't think we could look past. There's a lot of stuff, foreign, even sanctions. Europe is kind of, and Brexit has fizzled out. We have the oil markets, but again, the cost of money and rates and what it's doing with the economy is interesting because this is the worst December since the Great Depression. The economic data is slowed, but we're on like a 2011 scale. Growth hasn't really collapsed, but that's what people are kind of expecting. So again, on the reverse end, we could even be seeing something on the upside, where I think people are going to be more, people are so bearish now, any piece, it could get positive from here, but at the end of the day, the things culminating is you can't forget it's not just rates, and it's not just now the government shutdown, it's not just China, it's not just oil, but it's kind of how everything's blending together. And why I'm saying that is because we don't know what's leading the market. At the end of the day, I think it comes down to China and emerging market growth and globalization, and then what that's leading into, I think those go hand in hand with oil and the debt markets and the loans paired in with there, and then the trickle-down effect to the economy and other industries, and then as it gets to the domestic industries like real estate and other loans. But it's been interesting, this, and you guys, that's why I've been saying it on the stream. Everything we're seeing here is very, it's historical, but it's been a pretty, calm drawdown. But the volume and what we're looking like, it is resembling October now. We're finally seeing volume today pick up. It has been picking up the other days, but it's just right by October 11th. So we might see a day kind of what I'm expecting, maybe something in here, but it's really hard to say. Again, I'm more reacting, and I'm going to talk about in another video what I kind of move my plays into, because now the puts are getting expensive, and some puts are expensive, some are cheap. It's just going to be interesting. But yeah, this December, the Santa Claus rally, I've already covered it. It's just kind of, I'm just recapping this and coming into tomorrow, I think, on the live stream. There's a lot of stuff. There's a lot of stuff, but a little stuff. It's still been quiet. But what we've talked about this stuff in the past videos, and I'm just gonna drink some of my coffee. I totally blanked on what I was gonna say. This is just the Santa Claus rally. I don't think it's gonna come. It's comparing it to 2015. That's what it was, because that's the last time we saw it. Everything's looking parallel. Oil hit a new low, and that's something to watch. Oh, and the last thing, I said this on stream. I said this during the rate hike. Look at the USD JAPY, the USD JPY. That is the currency pair for Japan, and take a look at that in the correlation. That's starting to break, but I'm waiting for that. We have the down Friday, down Monday, that indicator. Again, just if you guys watched the last videos up until now, you'll see where I'm saying, it's kind of like I don't want to repeat or beat a dead horse because it's all been said, but you're seeing how this is all played out. You've seen how it's led to us making money. Now how we move from here is the next step. That's why I took profits. I'm waiting. I still have money on the table, and I moved it into something. Again, I'm going to post that video after this later tonight, so be ready for that, and we're going to stream in the morning. But all in all, this market that we're in it's going to be interesting to see where it goes, but for the most part, the downside is still there. We just broke below. There's no levels of support. People are panicking, but the thing I think there's just going to be no liquidity. And I think that could even leave room for a bounce or a little move, because today could have been worse. But 600 points, it's not that bad, but we're going to see what's going to happen. So that's pretty much it. If you guys have any questions, let me know. Make sure you go through the other videos. That's the best thing I could say. I've said, I don't know. Someone should put a count. So if someone could count how many times I've said that, that'd be great. But I'm excited for this. I'm excited to share the play with you guys, but all in all, be safe. You guys paper trading this. Some guys made money on the stream. It's awesome. The Tilray, the weed stocks, those are going to be something to look at. So it's how we play out. Again, the last video, the main point I said is understand the timing. And I said that even today. Understand the timing of sell-offs, rallies, and bottoming out, and how it develops. And you guys got to be patient. If you even saw the live stream today, we made a play, and the timing of it, I even messed up. I could have made more on it. It even went down at the end, but there were so many different opportunities you could have played. I actually played it on my other account, so I'll show you guys. Again, I'm going to go over all of these. I'll show you the 18,000 in 2 weeks. I'll recap these in another video. I'll keep you guys posted, but all in all, yeah, this has been fun. Love you guys. Subscribe. Give me some questions, comments, anything. Peace.